This is the swoosh, the famous symbol of Nike. Known worldwide and with various nicknames. However, what almost nobody knows is that it is not a property of Nike. And the reason behind it generates a $1 billion saving for the company. And it frees them from paying billions in taxes. In this video, you will understand how Nike managed to maximize its profits and avoid taxes during different years. And how this type of maneuver is used by other giants around the world. Undoubtedly, governments are major partners for companies. Through taxation, governments worldwide find ways to tax everything that moves, and they seem to have no limits when it comes to taxes. Because of this, giant companies are always finding various ways to pay less and less taxes, or even legally avoid them. These companies rely on some of the best and highest paid lawyers and accountants, who create financial engineering to maximize corporate profits. To give you an idea, in 2020, Nike had a profit of almost $3 billion, and did not pay a penny in federal taxes to the US. And in 2018 and 2019, it also paid nothing. In fact, besides not paying, during this 3-year period, it earned the right to $750 million in federal credits. And it's not the only one. Several companies managed to escape the lion, or at least greatly reduce its bite. Between 2018 and 2021, Amazon had over $79 billion in revenue and paid $4 billion in federal taxes. A substantial amount. The problem is that it theoretically should be taxed at 21% of the total, and it only paid 5.1%. All thanks to knowledge of legislation and tax offsetting that occurs in different jurisdictions. Do you think this is fair? Do you think large companies can pay proportionally less in taxes? To give you an idea, in the US and in some legislations, investments in advancements, research, and development can be considered deductible expenses in the final account. And often, companies that spend to develop themselves also end up not paying taxes, under the justification that the invested amount will be depreciated over the years. In the same vein, it's not uncommon for companies to prefer to borrow money from banks, paying a small interest rate, rather than using their own cash to invest in their structures. The reason? Borrowed money is deductible in income tax because it is a debt, and the cash in hand remains there, for a need. And since the company has a debt to pay, it can declare that debt and thus reduce its accounting profit. An example of the madness surrounding legislation and taxation occurred in 2020 when the US Senate approved the CARES Act, providing American companies with significant tax relief due to the pandemic. The problem is that the measure designed to help small and medium businesses allowed Nike not only to evade taxes but also to claim tax credits amounting to $109 million. However, internal maneuvering is insufficient for a global business like Nike. This is where a small Central American country and a widely used strategy by big businesses come into play: offshoring. In other words, sending money out of the home country and operating that money in various other locations. To avoid exposure to the US tax authorities, Nike established a strategy to scatter its actions and distribute its money to various other countries or jurisdictions, including tax havens like Monaco, Luxembourg, and Bermuda. But it doesn't stop there. To avoid being classified as tax evasion or simple fraud, Nike created an engineering scheme involving its logo, the famous swoosh. In reality, despite being its logo, Nike does not hold the rights to it. At least, on paper. This is because the owner of the logo is Nike International Limited, a company based in Bermuda. This company licenses the use of the brand to Nike's operations in the US and Europe. Even the European operation works differently, as it is fiscally based in Ireland, where the federal tax rate is almost half of that in the US. By licensing the use of the logo, Nike's operations in the US and Europe had to pay royalties to the Bermuda-based company. In other words, Nike paid to use its own logo. Thus, on paper, it had legal expenses that significantly reduced its profit in the American operation, and therefore, with no profit, there was no tax to be paid. It is estimated that the operation that took place until 2014 put over $6.6 billion in profits into the coffers of the main company. Due to an old law, this foreign gain did not create a tax obligation in the United States. In other words, it was clean money for the company. This specific engineering is no longer in use, but that doesn't mean Nike doesn't employ other tactics now. It is estimated that, in the Swoosh operation, of the royalty money received by Nike International, the Bermuda government taxed only around 3% of the total. A much lower amount than it would be in the US. It's true that this amount is proportionally small for a government that tends to want more and more. However, it is one of the few ways to attract foreign money to a country famous only for its beaches. The same happens in other countries that prefer to tax a small portion of the money that comes to them, rather than trying to tax a lot and have no one invest there. Currently, various countries adopt incentives and credits to attract foreign companies to their territories. As an example, China attracted Tesla to open a factory on Chinese soil in exchange for a substantial fiscal incentive. Similarly, African and Asian countries have followed the same strategy. Nigeria, for instance, grants $2.9 billion in tax incentives to attract foreign companies. These companies can contribute both in terms of money and by generating jobs for the local population, by building factories or logistics centers and offices. But this trend of lowering taxes in general for large corporations is not limited to developing countries, as it is estimated that globally, corporate tax rates have dropped from 27.5% a decade ago to 23.6% today. In any case, for years, Nike evaded the US tax authorities, and the strategy described is just one more in the repertoire of large corporations, which do everything they can to legally escape taxation. Fair or unfair? What do you think? Share your thoughts with us in the comments.